Hello and welcome to another update video about XRP here today. So with XRP, it continues to, sort of be caught in, let's say, downside pressure. At least we don't really have the upside pressure we want to see in terms of getting a possible reversal, but the possible reversal is not at the moment the primary expectation. No, at the moment we are still caught in this larger pattern, which is basically a bearish wave pattern that would lead to one more low for XRP. That is the primary expectation. I'm going to show you an alternative as well, and the key levels that are relevant. But overall, and I mentioned it in the last video, the overall scenario here for XRP is that from this wave 1, which was in April 21, we are coming down still in a wave 2, in a complex WXY correction. We're currently in the Y wave. Overall, the long-term XRP chart just doesn't look great. It's a huge downtrend, basically, you could even say. Yes, we have made, let's say, new highs in April 21, but they weren't new all-time highs. So this is not a sign of strength. And it also, in my opinion, has nothing to do with the SEC court case, because there are other coins that created exactly the same pattern. They have no court case going on, like XLM or IOTA, and that is generally looking at the long term, not really a good chart, unfortunately. So for me, I do own XRP. Yeah, I do own them. I sort of long term, because you never know. But it's nothing where I'm especially I have very large exposure to, or where I'm extremely bullish on. You need to know that, okay? And even here in the short term, I would expect primarily lower lows, because in this, if we say we are in the Y wave, the Y wave is a corrective wave pattern, so it consists of 3 waves, and we have here an A, B, C. Let me show you that. A, B, and we're now in the C wave down. That would be my primary expectation. And if we now zoom in to the 1 hour chart, we can see that, I think in the last video we talked about an upcoming correction, and then we talked about this WXY pattern for wave 4, which could be finished. It would, if we take a look at the overall wave count here, or retracements, it would need to be finished, because if it goes above the 39.7 cent level, it's above the 50% Fibonacci retracement. And if this is going above that level, then we have a different scenario. It would, for me, not be a bullish scenario. It would rather be a sideways scenario. So that means for you, if we don't break down now in the 5th wave, and to be honest, with the latest price action, it's looking like we are going to go higher, because this is a corrective move down. Nevertheless, until it's invalidated, I'm going to focus on this count. But I think important for you is to understand the key levels. What I try to make clear here is, if we go above the previous high of 39.7 cents, then I think we're looking at some more substantial upside, maybe into the region 44.5 to 46 cents. Yeah. But it wouldn't necessarily be bullish. Why would it not be bullish? Because you can very easily, if we don't make a new low here in wave 5, which would go below the June lows, then you can, remember we counted all this sideways move originally as a triangle. Now, we can still do that, but it would be a massive triangle, yeah? So if we go higher than the, what was it, 30, I can't remember, 39.7 cent level, then my first call would be to count all of this as a massive triangle. This a wave A, this a wave B. And the reason for that is, if we don't see another leg down, then this is only a 3-wave move down. So rather corrective, which would indicate this is a wave B. There would then be, and this is the next leg up then, that when I said we go above 39.7, this would rather then be a wave C. Then we come down in D and would move up in E, and then we could make one more low here, yeah. And this would then, be the wave B. So that the top of the E wave, which would be the completion of the triangle, would then be an extended B wave, and then after that we would see the impulse down. So these are the 2 possibilities, I think. So either we make now a new low in a 5th wave, sort of maybe into the mid-20s, or if we push higher, I would start to count this as a triangle. So that means that you know the key scenarios now. We can also give a target for the C wave by calculating it based on the triangle. And we do that by taking the length of the A wave and we add it to the low of the B wave. And then we get the 61.8% extension that takes us to around 45 cents, as I just said. So in that region would be an ideal target for wave C. Yeah. When do you know, or when is it getting likely that we're actually moving higher? Well, it is all based on the price action that's playing out here. I think at the moment we're creating something like a descending wedge, which you would consider some kind of a bullish pattern, not necessarily getting back into a bull run, but rather pushing to the upside a bit. And it's actually quite a nice descending wedge. So you can call it a bull flag or however you want to call it. The thing is then, if this plays out to the upside, then the first target would be the recent high at 40.1 cents. And then, as I just said, sort of the 45 cent level. And that would probably peak ideally in the area around 45 cents. At least that's what I can see now. And then we would come down in the D wave. And as soon as we know the top of the C wave, I can give you a low for the D wave. But yeah, so at the moment, I think both scenarios are quite likely. It depends on in which direction I think the price now is breaking out of this wedge. That will be that will give us the next clue, and then we can react to it if we're trading this. But yeah, that's my update about XRP. Hope you liked the update. If you did, please hit a like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye bye.